All right, Doc here from North America. Good morning, good afternoon, and good evening. Let's see what we got going on here. Let's get over to the Swiss. See where we start off from there today. Right there. Let's get moving over to the Swiss on Chicago Quant. Right there. There we are. And today they're selling the dollar. It's almost like one day they sell it, one day they buy it. It goes back and forth like as if, and still in this tight range here. You can see the green channel that we've been staring at is basically just hanging there. And it, let's see if we can contract it. And let's grab a hold of that line like so. And just, there it is. It just keeps on referencing itself constantly. We keep on seeing that over and over and over again. I think we had some news out this morning. We'll go and check the Dukascopy calendar. Let's check that out too. Woo, what's that? Oh, wild music. Okay. Skid. There we are. And let's get our fact check spreadsheet up there, like so. There it is. Let's move that over a little bit so you can see the J4X better. Move that over. Oh, okay, that's good right there, like that. That's a good spot. Anytime we can see more of the J4X with this is nice, because this way we can show you how our J4X tools match up with Doc's work. Alright, so now where am I headed? Oh yes, we're going over to take a quick look at the news. Let's see what it was this morning. I didn't think it was anything big. I didn't think they had where's it at? I didn't think that it was a high profile, but the dollar and the stock market have sold off a little bit here from it, which surprised me a tad. There it is right there. There we are. And let's scroll down. Just go to the day. There it is. Yeah, so right there, New York Empire State, that used to be a big one at one time. Now they, yeah, see, all those seem to be low. Is anything high? No, nothing's high. But they did sell down the market a little in here, so that caught my eye. And do we have anything this afternoon? Oh, I see, in about, oh, in the middle of this too, we have capacity utilization and production and so forth. Okay, 10 o'clock and 10:30. All right, but they're all considered low. Nothing's jumping out at high. It's the Canadian that has some high stuff right now. All right, that's about it. There you go. That's the news tape and the economic calendar. And I did see where they threw, like cable back into the sell. This thing here was into the buy for 2 days, I think it is. Let's check it out on line 21. Yeah, 2 days in a daily buy, and now it's pushed itself down today, meaning the dollar is going down in value and the Swiss is going up in value, and so they pushed it there. But notice that the weekly here is still hanging on. Let's see. Now, okay, let's jump over to the euro and see what's going on with the euro. There it is right there, lifting up again. So it's been in the sell now for days. It's been in the sell for days here. I don't want to do that. There it is. It's been in the sell for days, but we're in a weekly buy, so it's trapped in that neutrality of our math. Trapped there. And now it's trying to lift up, and if it closes in a buy here, then it says, okay, yeah, get long. 47 euro. There it is. Can we look at the euro against the dollar? And we will, and we are, as you can see here. I kind of find the euro hanging. It got a little bit firmer of late, I noticed. And what I mean by late, just in the last couple of weeks, it looked like it was starting to get some strength in it. We keep on hanging out in a weekly buy. Keep on wondering, what is it trying to tell us there? And at the same time, overall, you can see it's been trapped in the channel at the bottom end of the channel now for a month and a half. Yeah, look at that. So made this break from the top of the channel. This channel where these white dots are we've been following this channel now for over a year. And you can see since the inflation started to kick up, we've noticed that it's not challenging the bottom. It's not hitting the dots anymore. So, and it's going higher than the top dots. The channel has kind of it's kind of moved up into this area here, but we'll leave the old channel for the time being. Solely because, as the Fed chair says, it's transitory. It's not here to stay. But I'm assuming that's why the channel has shifted a little bit, is due to the inflation factor. Alright, so there we go. You can see this thing's been hanging out like this for a while. And we have this product also has the Bollinger Bands on it. Someone asked about Bollinger Bands, and we ended up looking at it in this product, and I think the cable too. It was interesting. Matter of fact, what we should do is we should change this, style-wise. We should change this to the Bollinger Band colors also. So we go like this. The red is at the bottom. There we are. And the blue is at the top, like so. Because this is my math using the same concept of one standard deviation. And when we look at gas 3 versus gas line 3, it's a 1 and 2 standard deviation. So that's what that's all about. But you can see here how we rally up. It starts to rally up here. You see that strength, and then what do you see? It comes into the marketplace. You see that the strength starts to top out here, and we get the lagging. It usually does that. It kind of leads in that fashion. And then in this case here, it got to, I guess it was this bottom here, and it led up, and then it broke here, and then we moved down. And so that's our little Bollinger thing going on, or our standard deviation. John likes to, they named it after him since he kind of pressed the concept, which makes sense. I mean, people were watching one standard deviation. It's just John put it to a mathematical formula that everybody uses now. And so that's where we're at there. What else can we say about that? I guess that's about it. The euro doesn't really have any real clear direction, in the sense that it seems to play the bottom end of the channel, and at the same time we are in a weekly buy-in. It doesn't seem to want to get that strength, to go flying up to the top end of the range. And even when we had this daily buy kick in here, it took it up to the middle of the range and then started to sell off again, which is kind of curious. I guess that's the only thing I can say about the euro. It does not show that it wants to explode up. No big explosion. But we'll keep an eye on it. But with quantitative easing, they seem to control these pairs trades very tightly. Okay. Now we'll go over to the cable. The cable went into the sell there yesterday, and you can see that's in a weekly sell for the last couple of weeks. So just as one is in the buy, the other one's in the sell, but this, I don't know, just looks stronger. Cable looks stronger. But are we going to see it move up to its top of its range? Also at the same time, let's see if we can define the top of the range there. We had it in there at one time, dots. Instead, someone asked about, was it you had asked about the Fibonacci? And we went and looked at the Fibonacci on the British pound. Someone asked about the Fibonacci on it. And so we've been leaving those up there. And you can see here it's hit the 50 percentile there. It's hitting it hard there. Yesterday it stopped because the dotted line is the 50, dashed dot line is the 50 percentile. And let's see what else. This is the 0.62, I guess you could say, or 0.38, depending on the direction you're looking for, and that's the opposite of it right there. And then that's the 0.23. That's what the blues are. All right, now again, this is hanging it out into the sell. This is hanging it out in the sell now, so it said be short here. And at the close at 138.08 basically, traded down to 137.92, so it went down about 16 pips. Not bad. Let's see how it looks on the Chicago. Go to the J4X there. Right there. And it's doing, it hasn't pierced yet. It's still hanging out in the long side. Let's see if this comes through. We've seen this J4X indicator sometimes give us a bigger, broader view. It's like increasing the average by, you know, like 3 times. Instead of looking at like a 9 average, you're looking at a 27 average. And you can see here, it lifted it up and it climbed just like ours did right there 4 days back. And then now it's just starting to go with the red dots. We went into the sell yesterday. We'll see if this thing can pierce right there. And that is the cable. I'm surprised you're not looking for the yen. Was it the yen? What is it? GBP yen. That's what it is. GBP yen. Douglas, good morning to you too. Yeah, GBP yen. You jumped right to the euro. Interesting. What do you think? Do you see anything that maybe I'm not picking up? I find it curious that the euro wants to keep on going, you know, marching along in a weekly buy, and it refuses to go to the top end of the range, which it had done for over a year now. It just seems to be battling with that situation. Do you think that inflation is having an effect on a lot of these pairs trades? I think it is. I do. I think that the inflation transitory thing has them stalled. That's why they seem to be meandering, I guess we would call it in English. In other words, they're just kind of vacillating, what we call it in English. They're going sideways, chopping, sideways without a high range. I guess that's the best way to describe that. Chopping without a high range. Yeah, that's the ticket. No response yet, but we'll see. 47 may say something there. All right. All right, so from there, we're going to jump over to the Turkish Lira until someone has an interest in anything particular. And there you can see there, the Turkish Lira closed in a daily sell the last couple days. It's kind of hanging out in here. We are flirting with the weekly buy down in here. You can see that. Let's check it out over here on J4X. Right there. And you can see the same thing seems to be going on. It's trying to break down right there. We haven't got red yet, but we will. It's just so tight. I think that's the excuse I can give why it hasn't, is that tight range. And like I said, in many ways, this is like expanding the average. When you might be looking at a 7 average or a 9 average. Well, the characteristic of this is like it's like double. That's why it takes some time for it to give you a direction, or a change of direction, more like that. Now we'll drift over to the Euro Turkish Lira. Right. Turkish Euro Lira. See right there. Let's put that one in too. We find the Turkish Lira really informative. Right there. And I figure it's all the key is location, location, location. I'm sure Europe trades more with Turkey than we do, just because it's closer. Right there, you can see it's still in daily sell, but trying. Getting a little volatility signal today, and our weekly is even trying to climb into the buy. So that's kind of impressive. We haven't seen that get into a buy since we were, where was it, back in June, is it? I guess it's June, yeah. Went into the weekly sell. And it fell down, you know, interestingly, you know, from the 10.35, 40 area to the, or 10.30, 40 area to all the way down to the 978 area. And see, what else can we say about Turkish Lira? I guess that's about it. Is there anything else to be said? I'd like to see this. If this does close in the weekly buy, we might be seeing some shift there. Again, I am totally convinced 100% that everybody is staring at inflation and choosing. Everybody knows it's a dead end. That's to liquidate assets, because there's so many assets that are losing money. And so there's a very limited amount of assets on the planet, yeah, and I can use the word planet, that actually make money. Okay, so you buy it and actually you make money from it. Last I looked, there was like something like 17 trillion invested into, just losing positions, solely because they need to park their money somewhere, and there's so much cash out there. They have to park it in the most secure place. And the only way, you can't do that in just regular banks, you got to go to government bonds. So that is why we've been seeing the action that we've been seeing. Alrighty. Now, what else do we do here? All right, that's the Turkish Lira. From there we go to the Canadian. Yeah, you can see here on J4X, it's trying to do something. It just doesn't have a direction. And it's so obvious. There's no reason for money to want to make any real moves. The funniest thing that they ask money managers today is, if you get a 5 or 10% correction, would you buy? They have so much cash, they have no, and I would hope that they're using options or binaries, so if they're doing that, there's no reason why they wouldn't buy. They've got tons of money, they're paid to buy. That's what their job is, to go out and buy. Their job is not to go out and sell. So, yeah, I have not heard one of them say no. All right. Before quantitative easing, that would have been a big bearish sign. And now, now we're in the era of quantitative easing for over a decade, almost a decade and a half. It's a whole different answer, a whole different genre, a whole different question, or a whole different way of looking at things. That's pretty much what it comes down to. All right, let's jump over to Canadian on the J4X. Right there. Still playing with the top end of its range. It doesn't seem to want to back away from that, which is curious in its own right. Let's see if we can emphasize the range in this product. Oh, I can see the bottom end. Where's the bottom line? You see here, it's since November of 2020. It was sitting on this 127 area. It has, raised the range, or it's touched that range. I guess you can say right there. And it's interesting always to watch the way different currency pairs lock in to values. I think we were watching a range in the 120 something, low 127 put. You can see the damage they put into this thing down in here, so we'll just leave it at that. And in many ways, you just move that up there like that. And that seems to be the range. And it's hit it there, and then it slowly drifted down to here, and it's back up to there. So I'd imagine this is the range we can say that it's traveling in. For those that like to do Fibonacci, the logic would be is to Fibonacci that range. You got to imagine a lot of money is doing that. And what's that, Douglas? What's the laugh out loud? I say so many things that could be laughed at. I am a jolly joker. Yes, I am. I am a funny person. Which is making me, if it wasn't for this COVID situation, I'd be like at some mic thing where you go in and you talk. I think I would go in and talk about the local events of the time, what's going on. And just be a comedian. But yeah, the Canadian is kind of just dragging along. You can see, it's been in a weekly buy for a while. So we move over back to the buying. Where is it at? Right here. So it went into the buy way back here at the bottom end of the range. out of that big giant range. You can see that there, and it has run to the top of the range. It stopped, and then where's it doing now? So it's just hanging out at the top end of the range. What else can we say about that? Not much, really. Yes, it's just that oh, here we go. Doc, you believe that the correction that people are talking is really coming? Not, you know, it would take, you know, like look at when COVID, we had a correction back in, let's go back and look at that correction back in February of 2020. We can look at that, but let's discuss that first. Basically, we had a correction because we had volatility funds that got trapped in a selling whirlpool, I guess you could call it. You know, a magnetic draw. I don't know, how do you want to, a sinkhole, I guess you could say. You could call that. And so what happened was, that's why the Dow Jones Industrial Average was going up and down like 1,000 points. Now, obviously, there was concern that the world thought that the world economy was going to collapse again, you know. But it was not that at all, and the Federal Reserve sat there and watched it play out. We discussed it back then. We picked the bottom back then. That was not much of it wasn't that hard, because once they went out of business, I kept on saying that for weeks, there were 5 volatility funds, and they got trapped. And they had made billions of dollars off of the quantitative easing by selling puts. And then when the COVID came along, people dumped COVID. And then what escalated it at the same time was these volatility funds had to hedge themselves. Now, the way you hedge option volatility, okay, volatility funds are selling puts, things like that, or selling calls. They have strategies like that. In this case here, they've been selling puts. They said that the Fed was the put, a free put. It was going to protect everybody. And so the volatility funds were selling naked puts, okay, not binaries, which is the better way to do it. Do it through a binary. But they were selling naked puts, and they did it for years, and they made, you know, a couple $1 billion, a few of them. They made like $3 and $4 billion, and they felt like they were, you know, God's gift to trading. And then what happened was, the only way you can hedge that when a market is collapsing is, I know this is a long way around to get to your answer. Remember, I always say there's good there are no bad questions in trading and money. There's only long answers or short answers, and this one happens to be a really good question. And you have to understand the history of the collapse, the last collapse we've seen, because we haven't had a collapse since then. And the reason why the collapse occurred was these volatility funds, the 5 of them, were trapped. And the only way you hedge volatility in options is you have to sell short. And you don't care where you sell short. All you do is have to sell short. You got no choice. So in other words, you just put market orders out there and they fill them, and now you're hedged. And what they were trying to do is survive. 3 of them went out of business. 2 of them closed. And they're back in business doing something else now. But 3 of them went out of business and lost reputations at the same time. Because not only had they made like $3 or $4 billion, they went out and lost like $6-7 billion. And so that's why from February to March, the markets were nuts. And what lit the spark, now this is what you asked for. You want to know what's going to light the spark. When you ask that question, it says, Doc, do you really believe that the correction that the people are talking is really coming? Okay? And I'm answering it as, what will light the spark to generate it? Okay? And I'm saying that it can come. We just don't know what is going to light the spark this time. Some type of military action, a loss of government control, something of that nature. It'll be ugly when it happens, but it won't fall the way it did in February or March of last year in 2020. And the reason why is those volatility funds don't exist anymore. And they were the ones crushing the daylights out of the market. Okay, and they had no choice. And that's why it was so short-lived, and that's why I kept on pressing the idea to all our trading friends here on the webinar that it's going to be a V-bottom, it's going to go back up. And, You can see all those videos from back then, and that's all I kept on saying over and over and over again. Once we got into a weekly buy, boom, it just turned around and went right back up again. It gave us the warning that it was over with. And so what will be the spark is some, odd event that is out of the norm right now, like COVID was then. I don't see COVID doing it now, because there's just not enough deaths from COVID to justify the government action that occurs with COVID. So, do I think we're going to see a 5 or 10% correction? No, I really don't. I think there's just too much. Last I looked, there's talk of over $2 trillion in dollars alone sitting on the sidelines trying to get back into the market. And as we started this webinar off, we were discussing it, is that there is no other place to go. That's what I was saying a little while ago in the beginning of this webinar. There is nowhere else to go. Most of the investments on this planet lose money. And so the only ones that make money are the stocks. So they're going to hold on to the stocks. They're not going to sell the stocks. They can put binaries on to protect them, or options. They can, just do all kinds of things with it. But they don't have to liquidate. And so, no, I don't think we're going to see a 5 or 10er. Now, next year, it's hard to say. Let's say that right now the talk and the feeling is that this fight to change the American economic system won't happen. The full fight won't happen until, say, November or December. Okay, so we got about 3 months, right? We got all September, rest of September, all of October, and then we got halfway through or almost all the way through November, and then maybe in December it'll happen. Okay, the way they did Obamacare, in 2010. They did it literally almost on Christmas Eve with nobody around, and so that's probably their next move. I myself, at the moment, believe that they're not going to get anything near what they're talking about, and so it won't have much of an effect, and I don't see them getting the increased taxes that they're looking for. They may get an ancillary increase in a few taxes, but they've got a wish list that's incredible in raising taxes. Now, if that thing had passed, as far as I'm concerned, the Federal Reserve is going to hold the market up no matter what. So, they allowed the volatility funds to go out of business and give everybody an opportunity to buy. And I don't think that scenario is here this time around. I think they're just going to hold the stock market up as long as they can. They need to do that to convince people that their political policies that they're trying to pass are good. And they're saying, look at the markets. If the markets were in calamity, we would respect that, and then we would believe that it's bad. But no, our policies are good. Matter of fact, no one can find, with any intellect, can find a economic scenario where raising taxes to the highest levels in history make an economy grow. But that's what Mr. Biden says, and that's what his team say, that if they only pass this budget, or not budget, this bill, and this tax bill overall, and this, whatever they want to call this thing, but it's a bill, that the economy is going to grow. That's what they say, the economy is going to grow. It's not. It's creating stagflation already from it. So the only way to hide that stagflation is to make sure that the stock market does not go down. And here, check out here's a really telltale sign. Check out the 30-year bond in the United States. I mean, during an inflationary period, let's put it up there. Look at it. I mean, they spiked it up the last couple of days. They got no choice. To keep that thing going, it's all politics, exactly. It is. It's all politics. And you can see here, I mean, if there was inflation, we would be seeing a bond that's not trading at all-time highs. That's all-time highs we're looking at here. That's all-time highs. So, the Federal Reserve has the ability to hold the markets up. The world is that damaged financially that remember. Let me just reiterate too. There was a time before quantitative easing that we never wanted to see debt increase and the responsibility of the Federal Reserve get diminished, or bad actions by government. We tried to keep that stuff clean, but once the world collapsed in 2008, at the beginning of the Obama success, just we don't have that world anymore. We have buyers of last resort now are the central banks, and we have major names that people knew for over 100 years. They're still acting like they're independent, but they're not. They're owned by others, or they're owned by a central bank, like Deutsche Bank, or Lloyd's of London, or Citibank in New York. There's a bunch of them. I can go through the whole list. Merrill Lynch. I can keep on going. So forth and so on. So, yeah, it's all political. I guess that's the best way to describe it. All right, where do we go from here? Where are we? Was it Canadian, right? Yeah, we were at Canadian. So, Canadian is just kind of cruising along. And from the Canadian, because we're seeing, what are we seeing in Canadian? Let me just go back up and look at Canadian through, so we can get a better feel. Yeah, so Canadian is in a daily buy for a day. I think that's line 20. Yeah, for a day. And it's trying to hold on to that buy right now as we speak. Right there, you can see it's plot 1 is minus 15, or minus 0.00015. So it's just trying to push into the sell with a green dot. We're in a weekly buy in the Canadian for a while now, as we started this particular chart off. From the bottom of the range, we've been in a weekly buy, and it went up from the bottom of the range to the top of the range, and still in a weekly buy. So they don't seem to want to do anything about it. I remember in 2008, Mr. Obama got elected, and the world markets fell apart. That's pretty much the only way you can look at it. That's where we're at. He got elected. The market started collapsing in August. Not collapsing, falling in August. But by October, going into the election, when they knew that he was going to win, the world markets just all fell apart. Because he's a socialist, and the capitalist America. Remember, people always consider America the engine to the world. So in other words, they say, okay, the world is a train, and the American economy is the engine. It pulls the rest of the world along. Well, if Mr. Obama wants to disconnect the engine, then the world isn't going to be moving along too well, is it? And so that's pretty much the way it's been. So under Mr. Trump, it started to change dramatically. We had some of the lowest unemployment, and the Federal Reserve started raising interest rates, the whole bit. I mean, under Mr. Obama, I don't think they raised interest rates ever until Mr. Trump won, and then they raised interest rates. The moment he won the election, boom, they started raising interest rates. For 7.5 years, they didn't raise interest rates, or almost 8 years they didn't raise interest rates. They kept on saying every quarter that they were going to raise interest rates, but they never did. And no one seemed to care. And the moment Mr. Trump gets in there, they start raising interest rates. They went from 0 or 0.25% to like 1.5 or 1.25 or something like that. Whereas Europe is still minus 0.25% or 0.3% or something like that to this day. All right, let's see, where else are we here? So that is the CAD. So the CAD is kind of sideways, and normally that reflects like weaker gold, weaker oil, that type of thing. So as it goes up in value against, it gets more expensive against the dollar. So now let's jump over to the gold market. We'll take a look at that real quick. In the oil market, you can see there gold is trying to go down. We're flirting with we went into a daily buy yesterday, and it's already trying to go into a daily sell. We're in a weekly buy. It's really sideways there. And then let's take a look at the crude oil. Crude oil, which that's kind of odd. It's got a green-red going on at the moment. Let's give it a Control R just to take a quick look at it. there. There you go, and that's better. So we can get rid of that. So we're in a buy there, and it's lifting up, which is usually going down, and Canadian would reflect that. I see 47 cents. There you go. Now you're going to ask. I was waiting for you to ask for that. No, we didn't look at GBP JPY, but I do once in a while without you around even. Yeah, because I find that fascinating product. Let's go take a look at it. Let's see, which chart do we have up there? Let's go to right there. Let's put it on J4X. GBP JPY right there. And let's put it up on here at the same time. Let's see what it's doing now. I've actually started filling that in on given days. See, we actually caught the sell in the sense of there, and then let's see. Not sure what that was all about. I guess that would be the buy right there. And now it's back in the sell again for 2 days. This is the second day. Let's put that up there. There we go. Alright, let's see what we can say about this. Alright, over in J4X you can see the pressure on it right there. You can see here we're starting to get the same thing here. We're getting that pressure right there. And we have been in a weekly sell in this thing since back here. Since was at the 155 area. And we're making a little push down to that 150 area. So a little pressure. Yeah, nothing major. Last 2 days, yeah. Yeah, it's a nice trading product. I like the distance between the buys and the sells. I think that's very good. In this case here, they threw it into a buy, where for 3 days it had some action. You know, closed at what was that, 152.13, and it ran as high as 152.85, almost a full handle. But it was in the weekly sell, so it was telling you don't take this too serious. So stand it aside, basically. Don't be short, don't be long. Now it's telling you, yesterday it's saying be short on this close right there at 151.48. And the low today is now 150.83. So it's going down over 3/4 of a handle. So that's pretty good. Yeah. Interesting. Very interesting product. I think I'm gonna take a sip of the water. So that's what the noise will be. Tastes good. A sip of the water. So that's what the noise will be. Tastes good. So, no problem. I actually tune in on it once in a while when we have time, with you or without you here. I check it out. I mean, you've got me watching this thing now. It's a really nice product. Yeah, do you remember Janash at all? Janash used to say that, when once quantitative easing occurred, we both identified the fact that, and Janash would discuss it more, that a lot of these minor pairs trades are now become equal with the major pairs trades. They're more liquid. I guess that's a distribution of asset responsibility by central banks. Whereas before, central banks weren't that involved. So like, the Royal Bank of Australia didn't really pay attention to that stuff, or the Royal Bank, or the Exchequer of London, or the Royal Bank of Canada, that type of thing. They didn't really get that involved. Now, because of quantitative easing, they're all involved all the time, paying attention. You hear Mrs. Yellen doesn't do it as much, but was it Mr. Trump's Secretary of Treasury used to define when someone is manipulating. I rarely ever hear Mrs. Yellen talk about it. She doesn't say anything about it. But Mr. Mnuchin used to talk about that a lot, where a country was manipulating their currency or was not manipulating their currency, which was very interesting to see. The opinion of someone that highly ranked in economics and government, to be able to them come out and actually have a clear statement about currency pairs. Is it overvalued, or when a currency pair is running up strong against the dollar, and the Treasury says, oh well, we say that's manipulation. That means that they want it lower. They're actually telling you where they want that currency, which is unique in its own right. The fact that they actually make that statement. Now, Mrs. Yellen, I have not heard her talk about it. Maybe the media just doesn't want to cover it anymore. I'm not sure what the problem is there, but it's just an interesting thing that occurred for 4 years. So they were sharing with us what they considered manipulation. All right, let's see, where are we at from here? So from there, and the Canadian, what we do is we go over to South African Rand and take a look at that. Normally we would expect it to be going down like it has been because the way gold has been showing strength, and we're in a weekly buy. But it has stopped, and you can see here there's some strength starting to kick back in. But this matches up very well with the strong metals complex. Matter of fact, that the silver closed in a buy yesterday. I don't know where it's at the moment, but let's do this. Let's just take a look at the South African Rand on J4X, and then from there we'll go over and take a look at silver maybe. But what we'll do is we'll finish off these currency pairs, and then we'll go over and look at the metals complex overall. We'll look at copper and silver and so forth. All right, next one is the ruble, the rub. Oops, wrong button. There it is. The rub. There's the rub. It closed in a daily buy yesterday. That's line 18, is it? Yeah, 18. So it's in a weekly sell for 5 weeks, or 6 weeks, 5 weeks. And this is the 6 week. And it's in a daily buy for 1 day. Now let's take a look at it over here. And you can see there, ruble's trying to push down. And there's the ruble right there. And so we went into a daily buy. We went into a daily sell back here. Let's put that in on the ruble. Sometimes this stuff disappears when I don't save it. Then it went to the buy yesterday, and now today it is playing with the sell. So that goes red. This goes red. And you can see the weekly is not flirting with the buy, so we're still in a sell from this here, right here, the weekly sell, and it's pretty much finally coming to fruition after this nice sell there. So that's been a nice winner. All right, now let me save that so I don't have to do that tomorrow again. Save workspace. Save as bingo. Okay, now let's jump over to the yen, not the GBP yen, but the dollar yen. You can see it's still in a, where's that? It went into the sell here. It's still in the sell. Did it go into the buy there? It did, didn't it? It flirted with the buy yesterday. What do we have up on the chart there? On the fact check spreadsheet, we have the yen in a sell for 4 days. So for some reason this was below it when I took those numbers. We'll just leave it like so for the moment, since it's on the fact check spreadsheet that way, and it's down lower making new lows, and we're in a weekly sell. That was another thing too. It tried to get into the weekly buy and failed at it, and so the action is pressing that down. All right, now jumping over to the Mexican peso. Right there. And that's not as, it's kind of like sloppy playing with the weekly buy, is it? Let's see, where is that now? It's in the it's above the weekly buy number at the moment. And if this was in a daily buy, you could play a quick short-term intraday. Oh, could you take a look at, oh, you know what, I just realized something. I need to do that too. EWZ, let's put that up there. And let me do that real quick, because I need to do something else too at the same time. Let me just save this just in case. Save as. There we are. Okay, let's go over to that open workspace, stock combo. Because I need to save 3 stocks. I just realized that. Let me go take care of that too. All right, here is the ETF you're looking for. Right there, you see it's starting the day off down. It's in a daily sell from here. Let's put that daily sell in there. I guess you haven't tuned in and asked for a while. There, oop, let's move that over. That's the wrong place to put it too. Let's put that in there again. Right there. So it went into the sell there. We've been in a weekly sell since back up in here. And we had a nice little bounce and all, but nothing major. So you can see there it's pressing down. Now I need to look at tags. Tags went into a buy yesterday. Let's save that. Tags. Let's move that down. Get that out of your face so you can see tags at the same time. There's tags. Okay. Then I need to do 2 more saves. I need to do DBA, which is like a competing thing. You can see this is trying to lift up also today. They're showing, but it's still in a weekly sell. So it's awful hard to do anything more than just make sure you're not short. Unless you're using options. When you're using options or binaries, you can get away with carrying positions like that, because you won't get stopped out. And then let's take a look at the Russell. The Russell's unchanged, which is interesting in its own right. But then I think we can go check out the stock indices too after this. But more than likely, they are probably doing the same thing at the moment. The last I saw, they were pretty much down for the day, except for the NASDAQ 100 or the Tech 100. So, oh, you weren't seeing any of that. Let me do that again. I'm sorry, I should have, there we go. There it is right there, EWZ. See that there? There you go. Now you can see it. Let's see. Right there. And so that is that. And if you want to see those others, I can do them really quick. See how that it's been in the sell since here and pressing down, and the weekly sell from here. See that right there, right in there. Then the other 2 that we looked at was the Russell. Russell went into a weekly sell last week, and it's feeling its pressure there. And the DBA, which is like a commodity combination, it's in a weekly sell from last week, but they're lifting it today. You can see that. It went down for a couple days, and now it's being lifted. How's that? Is that pretty good? And Robin, if you're listening, I just sent that over to you for the last one. All right, so that's the action here we're seeing. Did that help you out with the EWZ? I'll go back to that real quick for you. I didn't delete that because I know you asked for it, so I thought, oh, what the hell? Keep it on there. There we go. Now, what's next? Let's take a look at the stock indices. So let's go down. Oh, wait, we didn't look at the metals yet. Let's go see where silver is. See what silver's doing. Let's see, right. Where's silver? Right there. Silver's unchanged compared to gold. We'll take a look at both of those again. Let's see where we're at here. Let's move this over to there, like that. And there's silver. And so it's playing with a weekly buy. You can see right here. We haven't seen a weekly buy in that product in what, 18 weeks? Yeah, 18 weeks, line 9. We've been in a weekly sell for 18 weeks. Hey, no problem, Douglas. No problem at all. What else we got to say about this? And let's see if gold has perked back up again. Not really. Let's just give it a refresh too. No, the red dot has disappeared. That's about it. And but it's just leaning over. But still in a weekly buy here. So the metals complex is looking very firm still. Now that we got silver going in there. Now take a look at copper. Copper went into a daily sell yesterday, but is popping back up again today. You can see that there. And let's see if we can reload that. Yeah, see it right there. It's trying to pop back up again. At this point in time, it'll become a daily buy. It stays like this. And did we really get into the sell? I guess not. The sell really did not occur. It was close, but they pulled out those data. You can see the weekly is trying to drop underneath the zero line. Right now, it's at minus 0.0010. And then let's take a look at platinum. I just want to see what the platinum's doing because it just seems to find ways to just go down in value. Platinum. Well, it looks like it's trying to hold up today, if nothing else. It's still lower for the day, but they are trying to generate. And it's trying to generate a daily buy. We haven't been in a daily buy in this product in 6 days, almost going into this is the second week of no daily buys. And last time we went into a daily buy, we had some strength in there, but we're still in this weekly sell for 19 weeks. So it's not exactly giving us any warm and fuzzy feeling. Went into the weekly sells in the 12.5 area. Now it's trading at 932, so it's over 300 points lower. So there's not much you can do about something like that. All right, let's see, stock indices. We can do the stock indices if you'd like. Okay, let's take a look at natural gas, and that will kind of finish us up when it comes to the energies and the metals. Nat gas right there. Someone was asking again. It's now up in the 5.5 area. It's tripled in value since Mr. Biden took the presidency. I'm always mumbling about an ice age. So between that and Mr. Biden, boy, it's made a. What's confusing is there's a lot of people that Mr. Biden is asking to generate more natural gas and more oil, and it's not the United States. He keeps on blocking it here. It's just kind of crazy. I mean, some of the things that goes on is unimaginable. Unimaginable. You can't even invent these things. They're just that strange. I mean, they really are. Let's see, what else can we say about natural gas? Just that it's ripping through the roof. You know, it just is. Just in the last month and a half, it's taking off through the moon. All right, now where do we go from here? I guess we go to over to stock indices. Let's see what they're doing. There we are. Stock indices. Let's see what they're doing. Let's see, right there. So you can see here the S&P 500 is up 4 points. Then the Tech 100, the Nasdaq, is up 22 points, and the Dow Jones Industrial Average is up 3 points. Now they were much stronger this morning. And during the webinar, they did take out some lows. We can show you there. You can see here the webinar started. Where did we start the webinar? Right here. So the webinar was right here, and we are just now back where the webinar started, right there. So they were trading at 437, maybe a little bit lower than that, 436, and now they're trading at 440. So they were down a point when it started. Now it's up 4 points. For the Tech 100, pretty much the same situation. The webinar started right here. It was trading at 15.401, maybe you could say 400, say 15.4 evens, and now it's trading at, well, it's trading at 03. So it was at 22 points up or 21 points up. So that was holding on pretty well. Then the Dow Jones Industrial Average. Where's that at? Dow is right there. And the webinar started back in here, where it was trading at 422, and now it's trading at 59. So it's up 37 points, which is, and it's down 4 points at the moment. So it was down about 40 points. So we're seeing some pressure in the stock indices, but they're coming back at this point also. So it's nothing to worry about at the moment. Maybe 10 minutes from now, you know, when the whole thing starts to rock and roll again. Let's see. What else can we say about any of those? Let's see. There we are. So I guess what we come down to now is there anything else we want to look at in the stock indices? We could take a look at them on a daily basis real quick. I mean, that would be a good thing to do. There we go. Let's see, where are we at? Let's go to the daily on these things. Oh, you didn't even see what I was pointing out, did you? No, you didn't. Okay. Let me just show you them real quick again. I just realized that we weren't tuned into that. Right there. There we go. So there's the S&Ps and the start of the webinar. This is the Tech 100, the start of the webinar, and the Dow Jones Industrial Average, start of the webinar. Right around here. So you can see they put some strength into all these things there. All right, now let's go back to the dailies of them, and we'll call it a day. And we'll have to come up with a title for this too at the same time. Natural gas going through the roof. How's that? Let's see. Right there is this is the Nasdaq, or the Tech 100. It's still in a weekly buy, but it's trying to pierce down. We've been in a daily sell since up in here. You can see here the S&P 500, same situation. Been in a daily sell since here. We are flirting with the weekly sell this week, that's for sure. And then obviously the Dow Jones Industrial Average, we've been in a weekly sell for a couple of weeks now, and we've been in a daily sell for over 2 weeks too. At the same time, and it's fallen about 1,000 points. So put those all together, and you have an interesting market going on. All right, traders. If there's nothing else, we will sing our way out of here. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta for now, traders. Doc, over and out.